Hi guys, welcome back to the channel. My name is Brad. This is Firefighters Financial Toolbox. Today we're going to talk about the age-old adage, what's better, growth stocks or value stocks? Now, the reason I was is because I had this email from Ally Invest, and we're going to read the email and then we're going to talk about it. The age-old debate of growth versus value stocks has resurfaced once again, and the competition is heating up. Growth has largely won the battle over the past decade, with the U.S. economy on a record-long expansion. But now should be value's time to shine as the dust is settling and the economic recovery is on investors' mind. So let's dig into the matchup. Growth. Let's call growth the hare. Growth stocks are considered to have above average growth potential, and the term has become synonymous with technology stocks. Because let's face it, technology stocks are a big player in growth. Growth's outperformance over the last 11 years, beating value 9 times, has largely been driven by the Fed's low interest rate environment. Though slow economic growth and muted inflation has also aided in its dominance. Now the Fed has cut rates to zero and promised to keep them there until the U.S. economy is well on its way to the recovery. The rate environment is likely to stay in growth's corner. But growth investors can get rattled when tech companies communicate unwelcome changes to their profit outlooks. Hello, Google. Value. Let's call value the tortoise. Value stocks, which include a swath of financials, utilities, consumer staples, basically old, boring companies, you guys, established, boring companies. They tend to perform better in a rising rate environment that typically comes with some sort of inflation. Historically, they've flourished in the latter part of economic downturns and early on in economic recoveries. We saw that happen in both 2012, right after the European debt crisis, and also in 2016 during China's currency crisis. Who wins? In our view, growth may still have the upper hand here. Interest and inflation rates are expected to remain low for a while, and the world's shift towards technology is accelerating now more than ever, which supports revenue and profit growth for these companies even in a downturn. Additionally, growth stocks generally carry smaller debt burdens than value stocks, a favorable theme for investors. However, if the interest rates move higher, we could see value take back the reins. To get more on my take of this debate, follow me on Twitter, and it's signed at Just Bell. So Lindsay Bell is the chief investment strategist for Ally Invest. Okay, so what did you guys get from that? Obviously, in the last 11 years, growth has outpaced value by a landslide. But here's the thing. It's sort of the same question is, am I better off buying an S&P 500 index or buying the total stock market index? So in the last 11 years, VOO, or the Vanguard S&P 500 ETF, has outperformed VTI, the Vanguard Total Stock Market US Index. Why? Because small companies haven't performed as well. But here's the thing. If we look at history, historically, small companies outperform the stock market as a whole. Now, that hasn't been the case recently. So we get what investors call recency bias. So we tend to think what's been doing good lately is going to be doing good forever. And unfortunately, that's not the case. Perfect example, if you've had any international stocks, you know that for the last 10 years, they've been kind of terrible. They've been losing money. But they make up 50% of the total world stock market, you guys. We have to hold on to these. So think about it like that. So let's talk about growth versus value. First of all, what are growth stocks? Growth stocks are Amazon. They're Apple. They're tech companies. They're companies that are growing and they're reinvesting their money into their company to grow the company bigger. Now, people that invest in growth stocks are counting on their share price increasing. That's what growth investing is. You're investing to see that the stock market price is increasing. For example, you buy Apple at $200. You want to see it go up to $300 because if you sell it, you've made $100 per share. What is value investing? Value investing is a little bit different. These are companies that have been around for a while. They've already built their names. Coca-Cola, 3M, Procter & Gamble. Companies that have been around for in some cases, over 100 years. And they have established moats around their company, and they're very solid companies. And they pay their shareholders a dividend every quarter. And value investors tend to be dividend-oriented investors. They like getting paid for having that company. They know that even if the stock price goes down a little bit, they're still going to collect that dividend every quarter. They know they're going to get that money. Back to the email, it said growth does better in a low interest rate environment, and we've had that. And we're probably going to have that till the end of the COVID-19 thing. But what about after, you guys? What about after, when we have to pay for everything that has happened this year? And don't get me wrong, we're going to have to pay for it somehow. And who's going to pay? Me and you. And how are we going to pay? We're going to have inflated prices. We're going to have increased taxes. We're going to have all that. Which is when value stocks actually seem to do better. Do I think one is right or wrong? No, I think you have to have both. I think you should have a mix of all. I like dividend investing, but it's a very small part of my total portfolio. I have growth portfolio. I have a value portfolio. I have a total stock portfolio. And I use them together to grow so that none of us knows what's going to happen, you guys. I can't say for sure that inflation is going to go up or that taxes are going to be raised. I can say that I understand somehow we have to pay for what's going on. And the only way I know to do that is through raising taxes. So, what do you guys think? Put them in the comments. Let me know. Am I totally off base here? Are you guys growth investors or are you value investors? Let me know. By the way, if you haven't already subscribed, you guys, do me a big favor. Do me a solid. Hit that subscribe button. We've had almost 100,000 views. We're only at 600 subscribers. We can do better than this. Help me out. All right. Drop a like if you got anything out of this video, and we'll see you again.